Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Now guys, let's have a look on the gold market. So all suggestions that we have made recently have become true. So indeed, we have mentioned some tricky patterns that were forming on lower time frames on intraday charts, and we called to not rely on it and wait for some more reliable patterns on the bullish side. Despite that, we have perfectly looking Brent body setup on the weekly chart, and you can see in the current situation, as we said, that market is not controlled and is not driven by economical factors. This is purely rebalancing of the portfolios of the investors preparing for active stage of the Donald Trump policy. So you probably already know that he has made a few important appointments in his government, and very soon this will bring some fruits. And investors just preparing for that, accumulating of the United States dollars, investing and buying other assets such as Bitcoin. So all this stuff we have described last time. And you could see how actually setups, technical setups are distorted. So if you take a look at the weekly chart now, the scale of this action is rather strong. So that's why we have to start considering high time frames to make the forecasts and analysis. So on the weekly chart, you can see what has happened. Market has dropped the first level that was looking as absolutely hard rock support. And in a normal common situation, 99% this definitely will provide the bounce, but not this time. So you can see what has happened. Market just break it down. Next support that gold market could reach, I'm not sure this definitely will happen this week, but in general, this will be the next potential destination. It's relatively wide confluence. It's between 24.16 and 24.80, and previous tops around the B point, as you can see. That's the next area. In fact, for the Brent body trade, it is not some invalidation, because Brent body could start from any support, any fib level, even from the 618. So that's why the next level, once market will reach it, we still will keep watching on it, not only because of the Brent body, but because of the overall momentum. The momentum rather strong in long term, and that's why sooner or later, but it will lead to the very significant pullback or even challenging of the previous top upward continuation. We will see. But market has shown that 26 area not suitable for that, as it has not formed anything what we actually discussed, and this potentially might be formed, and that's why we just missed this level without any attempt of position taking and going for the next one. So on the daily chart, it's also no questions around head and shoulders, as you understand that market just ignores this. How we could estimate the potential target? So on the daily chart, usually when the head and shoulders fails, or better to say just not been formed, we use extensions of the most recent swing. Very often it gives nice results. And I suspect that market is coming somewhere close to the first one. So just let's see where it stands. Right, so market actually is calling around at 25.50's first extension of this leg. This level we do not need anymore just because it has been broken. Next one will be around 24.85, and it's actually agrees perfectly with the confluence support on the weekly chart. 24.7, 24.80, 24.15, and the daily downside extension 24.85. It's very close. So I mark this as a XA swing, just to show you what particular swing we are measuring for extensions. So these previous markings to the left on the previous top, and this also actually we do not need anymore, because it was really broken down. On the lower time frames, on the 4 time frame chart in particular, you could see what has happened on the points that we initially suggest that here something might be formed. But you can see no double repo has been formed. Market just dropped below it, but hasn't shown any retracement. So things that we suggested to see has not been formed. And correspondingly, we haven't got any chance to take the position. The same we could say about the performance on the hourly chart. We said that keep an eye on it because it looks really bearish due to the triangle consolidation, which is mostly continuation pattern, and signs of the bearish dynamic pressure. It seems that more probable that we will get the breakout, and indeed we've got it. The OP target that we initially talked about also is passed. So it was 25.66, now market already 25.46 and keep going lower. So from this standpoint of view, I do not see any reasons to consider a long position by far because we do not have any even hint that market stands on a pullback. Speaking about taking the new shorts, this guy's the same situation as on the euro currency. As I already explained, that the current price behavior has its own advantages and disadvantages. The advantage stands with the driver. So this is a fundamental background, and usually it's really stable and strong, which led market to ignore for some time oversold conditions, as on the daily, as on the weekly chart. Your task in this case just trying to catch the minor pullback that you could see on the lower time frame, so you could measure these pullbacks, harmonic pullbacks, and wait for the next one. Once market will form it, you theoretically could try to take the position. The disadvantages is that this way of the entry in the overall market, especially when it stands on oversold, psychologically is very difficult because you do not have pattern. You will have to place stop just based on some direction of some downside channel or something. So for instance, if you catch this retracement, you will have to where you will place your stop somewhere above the zero, so it rather extended, and it has some difficulties. So the second way of the action is more conservative, but you will anyway will have to wait for some more or less clear and strong pattern. So you will have disadvantages that probably you will have to wait, and market could go really far until we're waiting for it. Still, speaking about the gold market right now, since market stands on the target, here's the OP on the daily chart, this 127 extension. Currently, personally, I do not want to take the short position here immediately, and we're coming to the end of the week. So in the current situation, maybe it indeed makes sense to wait and see what will happen for some time. That's just my opinion, but if you will try and take the bet on the downside continuation, maybe you will be right. Here it's difficult to predict because the really tricky moment that you actually can't control the market, which is oversold. So technical indicators tell you that it's not a good idea to take in the short position, but on the other side, the downside action is not stopping. So it's just going and going. So you will have to search for compromises. And where you take this compromise, you correspondingly take some more and higher risk because you have to act in a situation that you usually do not trade it. And it's something not typical. And that increases the risk, overall risk. So you have to actually weight the advantages, disadvantages for you, consider your tactics that you're usually following, and just decide whether it's a proper and acceptable way to trade for you or not.